Hello everyone, it's James here and welcome to the video. It's been a pretty busy week, as you all know, across the markets, and we've been actively trading across various sectors, including crypto, stocks and metals and energies. We've been a little quiet on the currency front, but we have some trades on there too. So I hope you've all had a good week, and what I think is that we're approaching what some might call the crypto alt season, which is when Bitcoin rallies and the altcoins follow suit. The point of alt season, I guess, is to try and get into as many high performance altcoins as possible and then shovel that money into Bitcoin at the end of the run. So here's the thing. On Friday at Jackson Hole in Wyoming, it seems like Jerome Powell gave the green light for the markets to rally. It appears as if a 25 basis point cut in September next month is baked in, and it appears possible, if not likely, that we might get a 50 basis point cut in September instead of 25. The markets are rallying as a result of the rather dovish approach by Jerome Powell, and the relief is palpable considering the occasions that JP has managed to crash the market with one sentence in the past. So it's all looking good for crypto. I've got the crypto page up here in front of us, and as you can see across the board on Bitcoin, Ethereum and XRP, we rallied quite beautifully. Ethereum got more of a bid than the rest of them, which is good news because the other alts should follow, and Bitcoin may even play a little bit of catch-up to Ethereum. Looking at the charts, we got a big bid on Friday on Bitcoin. We have pulled back to about halfway, and I think we may try and find support there. I've added another small tranche on the dip right down to the 50% retracement level. As you can see, I've got a first target at about 136. That's the Fibonacci extension, and there are further targets higher up. If we zoom out on this day chart and convert the scale to a logarithmic scale, which I'll do right now, you can see we're trading above a very long-term trend line going back to 2022. I don't think we're going to break this trend line anytime in the near future. It's some way down below us at the moment where the 200-day moving average is too. Crucially, we're holding the 100-day moving average just beneath us at the double bottom, but we need to see a move above the red line, the big fat red line in the center, which is the 50-day simple moving average, and a hold above there. If we go to this page where I've got some of the additional altcoins, not only Bitcoin, Ethereum, and XRP, but we have BNB, ADA, Sol, SUI, and LTC. Many of these have already claimed the 50-day moving average, the thick red line in the center, and I'll be using those as trailing stop exits for these altcoins as we rally and we reach the top and turn around. I'll exit all of these on a daily close beneath the 50-day moving averages and then switch that money back into Bitcoin and Ethereum when we get to those points. Folks, I do believe this is an opportunity to create maybe not generational wealth, but certainly significant wealth in this run. And I don't want to give investment advice, and indeed, I'm not authorized to do so. But I've told you what I'm doing. I'm trying to get a bit of a run on these altcoins and then shift that money over into Bitcoin for longer term storage. As we got a bid on all of that stuff, we also got a bid on the stock markets. We're long on the S&P still. We have not changed this position. And as you know, I front ran the Jackson Hole meeting. I posted that up on X and here on YouTube too. We got long on the dip a few days ago, and Friday we had quite a magnificent rally. Don't get too excited about this though, because I think that we may have something like this playing out. My target for this move up is at about 6,650. Perhaps a little higher. There are further targets way above us, closer to 7,000 up here, but there's a very good chance that we'll hesitate here at the top of the megaphone and the 200-period Bollinger Band. So zooming back down to this level, we're still long and holding that position, looking for a move up to this zone here, where I'll probably hedge the long side and potentially look to go short. The price action at this level will determine how we behave, I suppose, when we get there. So that's the S&P. And we have no position on the NASDAQ. I'm looking to get long on the NASDAQ too, but we are long on MSTR. Let me get this out from behind my head. There it is there. A nice bounce out of the swing low after dipping down below that swing high, but a big rally yesterday after the Jackson Hole meeting. We have reclaimed the 200-day moving average right here on MSTR, and we remain long. We're also long on Tesla. That got a big bounce on Friday too. We have loads of long positions from well below us. You can see we're trading in the volume zone right now, and although we got a slightly bigger dip than I thought we might, there was my original path, we had a very dramatic bounce out of there on Friday with a shaven head bullish reversal candle. That's a very bullish pattern, and I expect that on Monday we'll continue to move up quite aggressively. We're also long on Coinbase, but we're short on NVIDIA. We'll come back to that in the next video. But we are long on Coinbase too, and we're holding the 100 and 200-day simple moving average confluence just below us. And that's it on stocks. We only have one currency play on at the moment, and that's short the euro yen. Looking okay, I suppose. Pretty much sideways. maybe just running out of steam. I think you'll see some divergence on the MACD, stochastic and RSI. And then going across to natural gas, well, we haven't changed our position here. I'm still long, but trading the continuous contract. We're still long. I'm trading the continuous contract, but I had to hedge that on Friday ahead of the weekend after dipping down. We're about 3 cents out of the money on this trade, looking for this to bottom somewhere around here. If we don't regain this level, and we'll have to switch to the futures chart for a better analysis, we may have to head down, as I've said in previous videos. This is the key support level on the futures, just above 2.7. Let's go to the day chart to see how that looks over there. And here's the day chart with what looks like a potential bull flag, although we still may need to reach the bottom of the bull flag before the bounce, but we have retraced to significant support here. And as you know, it looks like we're trying to form a base here, but it's hard going, hard work. Let's go back to the 4-hour chart. And zooming in here, you can see the larger potential bull flag pattern, but we've also got this channel within it. And we're struggling to get out of this sort of inner sleeve or channel. And the target, if we do fall down through this current level, could be down at about 2.2. That would be the bottom of this potential bull flag and also the bottom of this inner range or sleeve that we're trading within. If we continue to move down, and considering that we're already hedged on this position, I'll look to exit the short side of the hedge down here closer to 2.2 and then add some longs on there for this sort of path to follow, back up to about, I don't know, $5. Folks, these are not predictions, just possibilities, and I'm drawing them on here so that if and when we get to these sort of paths, I'm prepared. So to summarize, we're long, but now we're hedged with a 3 cent loss, allowing for a dip down to $2.20. But if we do hold here, I'll unhedge and hope for this price to continue to form a base and then move up higher. This is the futures chart, so we've now filled the rollover gap mostly. Not that we need to, it's a rollover gap, but the big support level really is at about 2.71, 2.72. And on the continuous ETF here at Pepperstone, you can see we're just about at 2.7. There's every chance that we could gap up over this weekend as we open up a bit later on today and move up back towards the top of the inner sleeve channel and then back up to the top of the bull flag. I haven't drawn that flag on here on the continuous contract, but you can see the inner sleeve. So we don't hold here at 2.7, expect to move down to 2.2 unless there's some intervention along the way, and then a bounce out of there for a move back up higher. I still think we're moving into a higher range for natural gas for the rest of this year, between about $3 and $4, rather than the $2 to $3 range that we've been in for the last couple of years. We're also long on WTI oil still, and that's okay so far. Looking just for a move up to about 67, maybe 70 at a stretch, and then a resumption of the downtrend. So we'll reverse direction when we see a change over there. And then quickly, folks, I don't want to spend a lot of time on this on softs and grains. We're still long on sugar. We're now short on coffee. We're looking to add the third and final tranche on here at the top of this range. I've got 2 small positions on so far, and I'd like to add some more at the top of this sort of falling trend line at the top. I'm not saying we're going to reach there. We're already short, but if we do, I'll add some more shorts on at that level. We're still long on soya beans. That's moving up beautifully up to the top of the range. We're looking for that sort of thing to take place and eventually a breakout through the top. I'm still long on lithium, thankfully not forming an island reversal just yet and dipping down to the top of that swing high, so hopefully we found support there. We're long from about $40. We're still long on wheat. It's doing its best. It's trying to hold that horizontal support line, but allow for a dribble down to a slightly lower level and then a sharp short squeeze. I still really like this pattern, and I think we're due for that sort of move, but later on. We may have to get further into the apex of this very, very long and drawn out falling wedge. We're also long on corn. That's moving up nicely, just moving up towards the top of the channel. And then also on cotton, I continue to like this one, looking for that to squeeze higher too. So folks, that's it. Have a great Sunday evening, and all focus really now is on cryptocurrencies and the opportunity really to put some money into the bank and to save it, probably in Bitcoin. In my case, you might want to save in gold or dollars or real estate or something else like that. So folks, before I go, please like and subscribe this video. It really helps the algorithms identify which videos people want to watch. That's the main way that they determine which videos they should show new viewers. You've got a few hours now until the market's open, so relax, spend some time with your friends, your family, watch something on Netflix, and I'll catch you later. And then tomorrow morning, I'll catch you at Ola Prime TV at 8:30 a.m. Eastern Time, and I'll catch you in my own live stream a little bit later on after that. Take care. Have a great Sunday. I'll speak to you soon.
Talk stories, gotta cash that check. Bullish and gold, finesse the bulls on parade. Bears get nervous, watch them start to fade. Hammer at the bottom, bounce that beat. Market saying I ain't done, I'm back on my feet. watch that drop. Trend reversal, baby, time to call the cops.
Stick talk, read what they say. Candle spilling secrets every single